Good morning. Welcome to Money Monday on the Daily Huddle. I'm Zack, Otey, and this is Kimberly, and we're your hosts. We have a guest host with us today, a very close friend of mine named Jason Portt. If you've been following our Money Mondays for a while, you've seen him here before. And I'll let Kimberly give you his bio because I can't read it with a straight face.
I thought he was just gonna say I can't read it. I thought it was his old age eyeball conversation he was having. Zach's in my spot today, so it feels really, really weird to be sitting on the left. Is this your left? Yeah. So today we're going to talk about what's up with Bitcoin. I think probably a lot of you guys have seen what's happening and you've seen the news and the excitement and all that kind of stuff, right? So we're going to talk about what's up with Bitcoin. Jason's been with us before. He's here again with us today. But let me tell you a little bit about him. In 2015, he recognized the potential of Bitcoin as an emerging asset class, sparking a journey of advocacy and in-depth study. His fascination with its decentralized nature and the promise of blockchain technology led him to become a vocal proponent of its adoption. Over the years, his dedications extended beyond mere support. He's delved into the intricacies of the Bitcoin protocol and its investment landscape. This dual perspective has equipped him with a comprehensive understanding of its capabilities and challenges, solidifying his role as a knowledgeable and passionate expert in the field. So super excited to have you back today. Last time you were on, you gave us some basic, right, Bitcoin information and kind of gave us some basic education for us greenies and newbies and clueless people like me. I'm like, what does that mean? But now tell us what's going on. What's going on with Bitcoin?
So
what's up?
It is up, right? Bitcoin's up.
It's up. It's up. And it's amazing how closely people pay attention. The meme survives that I constantly see, which is, I talk to people, hey, take a look at Bitcoin when it's at 60,000 and people are like, nah, I'm not interested. Now it's at 100, everybody's calling me. I'm getting calls left and right. How do I get in before it's over 100? I want to be able to say I bought some before we're at six figures. And then the same people, I messaged them a couple days later. Hey, did you get it? Well, I don't know. I saw it fell back down to 95. I mean, it's probably going to go lower. And I'm like, we've done this dance before,
Right.
So, and again, I'll reiterate that one of the things we like to say, if you've been doing this for a little while, is that everybody gets Bitcoin at the price they deserve. And you got to do your homework, man. When it clicks, it clicks. And I think that's what we're really seeing now. There are a lot of people that didn't understand it, didn't look at it previously, that are big names, and that now that they've done the homework, it has clicked. And we're seeing that with the BlackRocks, with the ETFs. We're seeing that with institutional money. Geopolitically, we're seeing this at the nation state level. That's another big piece. Donald Trump, the incoming administration, came out saying, hey, we want to do this strategic Bitcoin reserve. That'd be similar to the gold reserves that we keep. We also keep other commodity reserves here in the US. So he stated that that's what he wants to do. A lot of the people on his expected cabinet feel the same way. And of course, what that does is provoke a global game theory for other nation states that say, well, wait a minute, if the US starts buying this, then we need to buy this. And you're already seeing smaller nations, smaller countries, and even states starting to pass legislation to look at this, study it, or even potentially move forward with purchasing it as a strategic reserve. And when that game theory starts to play out, this is the first opportunity that Main Street has had a chance to really front run Wall Street. And now it's also the first time that smaller developing nations have had a chance to front run developed nations. So there's a lot at play here that's pushing the price. Granted, Bitcoin does and has previously moved in 4-year cycles. That typically follows global liquidity. So every 4 years, we typically see, except for kind of this interesting period of up only that we've seen since the financial crisis with artificially low interest rates, we typically see liquidity move in 4-year cycles also. And as it ramps up, Bitcoin would ramp up. When it came back, QE, QT, when they pulled it back, Bitcoin came back. And we're starting to break a little bit of that. Is this time different? I couldn't say. But with the simple economics of supply and demand, We're seeing less Bitcoin available for purchase on exchanges we've ever seen in the past, and it's continuing to drop. And BlackRock's IBET ETF has just accumulated more Bitcoin. It's over 1.1 billion, which is more than the original Satoshi Nakamoto address that he did when he first created this and started mining and accumulating Bitcoin. So he's always held the most as far as anyone knew, and now he's been supplanted by BlackRock. So that in and of itself, I think, is a pretty incredible achievement, followed with the fact that those ETFs at this point are by far the most successful. I mean, BlackRock did what they did within 11 months. It's unheard of.
Yeah.
So I think that's what you're seeing in the price here. And truly, I think a lot of retail investors have been burned by this over the years. They were too late to join the party. Then, we had a they either got out of their position, or they're resentful now. They don't want to get back in. But sooner or later, everybody finally, as we know, when everyone else jumps, sooner or later, everybody jumps. And so I think we're still kind of waiting on retail. And that tells me, same thing with things I'm seeing both on the charts and people smarter than me that I follow, is we've got a lot farther to go this cycle.
Hey, did you say there are people smarter than you?
Only in
Just
this
kidding.
group.
Just kidding. Just kidding. Just kidding.
So, when you talk about retail, you're talking about the end user, the customer, like me, like you, that would go through an app, that would go through, some other means to purchase Bitcoin. And one of the great things about it, I think a lot of people, maybe they do understand, maybe they don't understand, is that that you can buy Bitcoin without buying a Bitcoin, right?
Mm-hmm.
And I've even talked to people recently that were like, I can't afford, that. And I'm like, no, you buy it, and you can buy it with whatever you buy. You can buy fractional ownership of these things,
Right.
and it's all kept. Talk a little bit about, just because I know that's the one sticking point that a lot of people have, is I've heard this so many times. What is it? And do I actually have something? And how do I know that it's not just going to evaporate into the outer space of the internet?
Sure, absolutely. So, when you're talking about who is the retail investor, who is that end user, absolutely, it's us. If we want to go on Robinhood or Coinbase, something like that, or buy through a brokerage, PayPal, Venmo. I've got friends that have started buying about $20 every paycheck through Venmo, and they just let it sit. Right now, Venmo technically custodies that, which would be PayPal. Same thing if you've got it on any exchange, it's being custodied just like a bank. But there is no actual physical Bitcoin that they're holding. What they hold is what's called your private keys. And there's two sets of keys. There's private keys that secure the Bitcoin, and then there's public keys, which is how you can kind of see the address. So think of it like your account, your checking account, it has an address, and then you've got your routing number for moving stuff around. But then there would be a secret code, so to speak, that if you don't possess that, you can't decrypt the encryption algorithm.
Like your PIN number or something.
Like your PIN number, you can't decrypt it, in which case you can't move it, you can't access it. What's really great about Bitcoin is the fact that because it's secured by a protocol, meaning it's a software that's run on multiple computers, anyone that spins it up can run it. So they all check each other, and basically it's a great online ledger, which means it also exists entirely in cyberspace. So being decentralized, there's not actually, just like with your bank account, checking account, there's not actually an account for you at that bank. You can't, it's not a safety deposit box. You can't walk in and say, I want to look in my account. They just say, well, here, your account exists up here, and we can tell you what's supposed to be in it. They control their gatekeepers for where you can and can't send it. It's one of the things I'm also being asked about. People come back and say, well, my bank can't authorize a transaction, or they won't verify that I can transfer it. While we see the outgoing administration has been really hostile towards Bitcoin, you've got a little bit of that that's going to kind of carry on until we start seeing some changes in regulation and whatnot. The banks have been told, let's keep the money in the banks, or whatnot. So some people are struggling. There's different ways you can go about it. But the reason it's not going to evaporate is because the protocol itself is secured by energy. The more processing power you have coming in, which is at all-time highs right now, and it's continuing to increase. When we see the leaps that we're seeing as far as how much additional hash power or security is coming into this network, it's obvious that you've got some incredibly large players that have not yet announced they're participating involved. We're talking hash power at the levels of, I mean, if it's not, an Amazon or a Google, then it's, it's a United States or a Russia or China or something like that. Well, the network's secured by those computers that are processing and securing that network. And the more computers that come online, the more people, even just you and I, if we spin up a Bitcoin node so we can look and see where the Bitcoin is, that's all we're doing. It's a ledger again. Then the more secure the network becomes.
So
And go ahead.
just kind of to simplify this, I'm thinking through what you're saying. So first of all, one thing a lot of people don't realize is that when you look at your bank balance, whether it be at XYZ Bank, and you pull up that balance that's there on your computer, on your app, that doesn't sit in an account either, right?
Right.
When we talk
Correct.
about the federal government printing money, which is a term that we've used throughout the COVID crisis and all those kind of things, they didn't physically print dollars to match every single one that shows up in everybody's bank account. That is basically created money that's sitting in accounts that was not actually printed. So it's very similar, but it's only controlled basically, right?
Mm-hmm.
Or supported by, as our dollar bills say, the full faith and credit of the United
That's
States
right.
government. So what you're getting here, we're getting checks and balances, if you will, from around the globe,
That's
where
right.
it's not one entity or one sovereignty that's controlling the production of this. It's a finite resource.
That's right.
We know that and we understand that, and it's also it's got to be it's checked and balanced. It's checked and balanced all the way
That's
around the
right.
world. So
That's right.
yeah.
Absolutely. And taking it back just 1 second to the whole retail investor and this opportunity, what we also haven't seen is, brokers, Fidelity. I spoke with Merrill Lynch the other day. It was very interesting. Quick anecdote. I went in with my father. My father was making some, estate planning, doing some estate planning. Want to introduce me to some people that helped him manage his money over the years. And I walked in. It's a senior vice president of Merrill Lynch and his son who had been working with him. Two very incredibly successful guys, been in this business for a very, very long time. And we walked in, my dad, hello, how are you? He introduced me, and he loves to introduce me as, oh, that's my son who's really big into Bitcoin. And they said, really, Bitcoin? And then they immediately said, we're both maximalists. And what that means is these are guys that have done the work, studied it, and they're full faith. They really believe in the long term that this is going to be a global medium of exchange of value, not necessarily. Sure, we'll be able to buy coffee with it. Everybody asks that, but that's not really the best use case here. We're talking international trade. We're talking sovereign wealth, et cetera. And he said, "Oh yeah, we're in this, and we've got full faith, but they're not allowed to talk about it." They said, "We're talking to you right now as us. We can't talk to you as Merrill Lynch." And this has been the marching orders from pretty much all of these large brokerages and banks and things like this.
And
The
a
only
lot of
people
them
they
won't
really
allow
are
to hold it.
letting,
Yeah,
what's that?
a lot of advisors are not
Can't.
they're not only cannot talk about it, but they are contractually bound not to own it.
That's exactly right. And it's frustrating them. And then some of them, I think, there was a convention. The same guy told me about this convention he went to. And the guy on stage asked, who owns Bitcoin? All financial advisors. 80% of the place puts their hand up. Okay. How many people are allowed to talk about it with your clients? Every hand went down.
Yeah.
And you got to ask yourself, why is that? And of course, it's to protect you. And it's to protect you because apparently we're not intelligent enough to really make these type of decisions for ourselves. But high net worth individuals can request, can ask about it, unsolicited, of course. And in doing so, then they'll do some reviewing. Last I heard, Merrill will offer it to you if you have at least 10 million liquid. So at this point, who's trying to front run who? The banks are filling up their bags, as we say. They're trying to get their other guys positioned, their highest net worth clients positioned. And then ultimately they'll say, you know what, we were wrong. This is
You
more
can buy it,
secure
but you can buy it from
now.
us. We now
And
own it
some
all, so
that,
you can buy
yeah.
it. Yeah.
And you're seeing Charles Schwab. They finally have given the green light again. Still, guys, I think that have over $100 million accredited or whatnot, but they've finally been turned loose to go out and do this. So
So
the best thing, I mean, I encourage everybody, and Zach, we were talking about this, this past weekend. Someone asked me, I think it was shortly after we had left in 2017. I think it was our friend Ryan said, Portt, I've got this chunk of money. Should I put it in Bitcoin? Absolutely. You know, well, he came back later and he's like, well, I didn't do it because I had some, he was going to plan a wedding and some other things. And he said, I'm glad I didn't. Boy, did it crash. Um, well, I think Bitcoin at the time was $7,000. And he said he had about 4,000 he wanted to put into it. And sure, it crashed back down. But we were looking at it, same thing with my father-in-law. It'd be up 90, or it'd be up 1,272% from if they had made those purchases when they had intended to make those purchases. So stop looking at the price. Do yourself a favor. I've said it before on the show. The risk at this point is not having a position, not having exposure. So if you're thinking about it, make the jump.
Yeah. So let's talk about that then from having a position or owning some Bitcoin. What's the fundamental difference between me buying into the Bitcoin ETF versus me going to a platform and buying Bitcoin and putting it in a wallet of mine?
No, I'm glad you brought that up. I think it's a great thing to talk about. So it depends on the type of exposure you want. There's different financial products created, obviously, for different people. With the ETFs, obviously, what they do is they create shares. So shares they're derivatives of the Bitcoin price. So they derive their price from the price of Bitcoin. It doesn't stop. To make the point of buy at any point is these people, institutional investors, don't care what the price is. They want exposure, so they're going to come in and buy into the Bitcoin ETF, IBIT, whatever it might be. Anyway, when they purchase, they send their cash. IBIT creates these shares, then IBIT has to go out and purchase those shares to back that Bitcoin. Okay, that's what we're seeing. So you're never going to physically own Bitcoin. You're really just owning another financial product. That's fine. It depends on your risk, excuse me, your risk tolerance, because at that point, sure, the government could say, a lot of people have talked about, Executive Order 6102, which is where President Roosevelt said, put out the order that he was going to confiscate all gold. Americans during the Depression weren't allowed to hold gold anymore. Okay. Any number of things could happen. And if something becomes valuable enough, you have to worry, is the government suddenly going to say, you know what, we're going to seize this? Same thing if we went to war. Are they suddenly going to say, sorry, I know your Roth is, Roth IRA can't be taxed, but we're in a pretty big crisis here. So we need to take that from you. So if you want to have self-custody, then you need to actually buy Bitcoin, transfer it off of an exchange or somewhere and hold it personally, which you can do with hardware devices.
So, but from a perspective of ownership of Bitcoin and it being a finite resource and who actually has custody of that, if I buy into an ETF, I'm basically giving these large institutions my money so that they can own the actual physical Bitcoin and let me participate in its growth in a share fashion, right?
That's
so when
right.
it comes to push and shove, when you buy into that, you are participating in the marketplace, right? And you're able to participate in the ups and the downs of Bitcoin, but you're not actually physically an owner of Bitcoin.
That is correct. In fact, they're taking your cash, and of course, they're going to use your cash to make them more money. They're also buying the Bitcoin for you, or the share. They're putting that in. Well, they're making money on that Bitcoin that they're custodying for you. I mean, this is what we've seen with the financial crisis. We've seen this with a million other situations you can really look at. But that's what they do. Give us your money. We will help you earn on this money one way or another. And we know how terrible interest has been with banks lately, but they're taking that money, they're investing it, they're keeping them, most of the proceeds from that. So Zach, you're absolutely right. There's different ways to go ahead.
One of the things that we talk about, or that you hear a lot of people talk about, is housing prices and how the largest buyers of single family homes right now are not single families. And I think that it translates into what we've gotten comfortable with as a populace, whereas I'm going to not take that risk personally. I'm going to do this and trust these large entities and trust these large, large banks, large, whatever you want to call them.
Sure.
And that's like renting. So if I go to, I equate renting a house that's owned by BlackRock to an ETF in this case, where
Sure.
it's like,
That's right.
yeah, I'm going to be able to enjoy the house and I'm going to be able to participate in living there, but I'm not necessarily going to be able to participate in the long term benefit of having the equity there. So anyway,
Yeah.
that's me going down a little bit of a rabbit hole because I think as retail investors, I think one of the things that a lot of even advisors don't understand is that the advice they're told to give is not necessarily what's best for them, or for it's predicated on who benefits the most from the most people following that advice. And I sound very conspiracy theorist at that point, but I
No.
think that
But I think we could look through that conversation or that statement through lots of our world.
yeah,
right?
but especially with Bitcoin, especially now that you talk about early adopters versus late
Mm-hmm.
adopters, you don't
Mm-hmm.
talk really about people that are not adopting, right? You're either going to adopt it early, like you
That's right.
did, and like my other Jason friend did, that I've been picking his brain for a long time, or you're going to ultimately adopt it at some point in time because it's coming.
That's right. My mom said she was never going to buy a smartphone. She was probably the last person to buy a smartphone, but she bought a smartphone, you know.
Because there was nothing else available. She couldn't get
Same
a
thing with a
phone that worked.
microwave, you know. I mean, it's like
Yeah.
you can look at the adoption curves, but I don't think it's I mean, I think it's a rabbit hole you should go down, because there is another saying that's out there that I see repeated often, which is you will own nothing and you will be happy. And we are moving that way because
Yeah.
we're moving towards this point where if housing is so unaffordable, then and wages don't keep up with that, people can't afford.
Mhm.
And instead, you're being pushed with this. Why do you really want to own a home? The upkeep, this, you're locked down. You can't travel. You can't move on a whim. They make it sound so great. Well, that's again, give us your money and we'll take good care of it for you, and you'll be happy for a short period of time in this house. And we see it with Amazon, Google, Microsoft, etc. Everything's moving to a subscription model, you know.
Yes.
And with AI, I think we're moving towards this thing where you're going to have AI and all the ring locks and all the other locks that you have for your house. You come home and AI unlocks it for you. And ultimately that can also lead to a place where if you don't pay your bill, you can't get in your house. You know. Yeah, I love where someone said Tesla with the autonomous driving, sooner or later you don't need car salesmen. They sell themselves. People do their homework online. The car drives to your house and you get to drive it. You miss your payment, the car drives away. You know. So we're in this really turning point in
Interesting.
history as this stuff ramps up, and it will be exponential that we see this come online. And I think there needs to be safeguards in place. I think we do need to be very thoughtful about this, but we do need to be early adopters, because if you're not studying it, you're not getting involved in it earlier, you're not going to understand it later. And as they say with social media, if you're not selling the product, you are the product, right?
Absolutely.
So on that note, right? So saying early adopters, a lot of people that I talk to are saying, yeah, I should have gotten in, but it's, I'm not going to do that now because, I have a buddy that got in when it was, $6 a Bitcoin or whatever, and now it's $100,000 a Bitcoin. Obviously, there's a lot of thought about that it's, what do you see? And we're not promising future results. Nobody's giving investment advice. This is a fun conversation, right? So that's what I want you guys to understand about this. Nobody's saying this is right for you. We don't know you. We don't know what your situation is, and you're looking at this video talking to us about this. Everybody's in their own situation. So I would tell you, regardless of where you sit, do your homework, like Jason says, but also ask a professional, and ask that professional if they can talk about Bitcoin or not. And if they can or they can't, then talk to somebody who can, that understands Bitcoin. But get a professional involved. Don't just make whim decisions unless you're talking $20 a paycheck or something like Jason's talking about, something you can handle, you can afford. So, but where do you see, and this is where the numbers are mind-boggling to me, because I see things.
Sure.
I've heard them talking about when, years ago when I started talking to you about Bitcoin, $100,000 a coin. I was like,
Well,
holy
we definitely missed out being an early adopter from you and I think our other friend Jason was pre you, right?
They were both in that same time frame, but the numbers that are getting thrown out there now is like, I say the sky's the limit is what people are saying. What are the short-term, long-term projections that you're reading and that you're seeing in your research?
It's a smattering all over the board. There's the guys that are the true quaints that get in there on the charts and say, this is what makes the most sense. And the immediate targets are, oh, we're going to see 140, 150, 160, maybe 180. And then you've got the other guys that are both, doing the fundamental and the technical aspects, but are also considering again the global geopolitical, geoeconomic landscape here, and also running these extrapolations out, to 2045 and things like that. Michael Saylor with the MicroStrategy, I encourage anyone to look up his keynote speech at the Bitcoin conference. He says by 20, I think it's by 2030 something, I can't remember, 2035, something like that, we should be sitting at $13 million a coin or something. People are like, how on earth? A lot of people are calling for
I'm
$1
gonna
million,
need that
800 to a million, this particular cycle. And there's different reasons for that. It's all because of the positive sentiment we're seeing. If there's a congressional Bitcoin strategic reserve asset bill passed, if certain countries are starting to say there's no capital gains tax on it, there's so much positive stuff that we could start to see all this coming in. And people, the biggest question I get, but how? I don't understand. How is it that it can hit these type of valuations, especially in shorter time frames? And let's go back to the BlackRock buying up homes example. Okay, real estate's $340 trillion globally. Okay, people store their wealth in real estate. That's traditionally the way it has been. Well, if we're in a situation now where you're starting to see people say, like I think a mutual friend of ours, also named Jason, decided to do, I don't want to keep my wealth in real estate. I'd rather keep it in something I can carry around in my pocket. Well, with hurricanes decimating Florida and homes becoming uninsurable in the state of Florida, if BlackRock says, you know what, we own the X number of homes, but we can't insure them, and you know what, that's much riskier than owning something like Bitcoin. Then a percentage of those that asset class basically gets siphoned off into, which is Bitcoin, the singularity. And if you just start taking 2%, 3% from different asset classes, I know that the bill put forth by Senator Lummis says, hey, let's start selling some of the gold reserves so that we can purchase Bitcoin. We want to try to get up to 1 million Bitcoin or even more as this strategic reserve asset. So if we start selling gold, other countries start doing that. China just found the largest gold deposit ever in recorded history in central China. People that say Elon Musk can't take a rocket ship to an asteroid and come back with more gold, gold is inflationary for a reason. And if you find the biggest deposit ever and China now holds that, why is it in the US's interest to be on a gold standard? We need to be on something that's, neutral or not controlled by anybody. And that's where Bitcoin is. So that's where those numbers come in. Bring a little bit from the bond market, bring some from the equity market, bring some in from real estate, et cetera, and the percentage of global wealth that Bitcoin starts to suck in and adopt is what takes us to some of these levels that just are mind-boggling.
All right, so I want to like two things. I know we're almost out of time, and I appreciate that. I could listen to you talk about it, and I could absorb the information, as I'm sure some of our viewers could too, for an extended period of time. And we'll talk about that later, how to get back on and those kind of things. But first question that I have, and we'll make it real short. What about other crypto? Is this something, because I think we're going to see where people are like, well, I miss Bitcoin. I'm going to go out and buy some of this other stuff. What would you encourage or caution about that?
Sure, great question. Well, that's what you had with a lot of developers that didn't develop Bitcoin. They said, "Ooh, why didn't we think of this? Well, you know what? We can copy it. Let's make something like it." And that's where you've seen Bitcoin Cash or Bitcoin SV, or oh, we can improve on it. Or you know what? We're going to make something similar but we're going to make it better. And that's where Ethereum came in. Or we're going to make something that's with high viscosity that can really move between the banking network. That's where XRP came in. So there's a lot of great projects, but you're also talking over 4,000 different coins. You've got meme coins and things. I mean, I think, recently there's a coin called Hawk for the Hawk Tool Girl. And this is something that shot straight up and then crashed right back down.
Shot straight down, right?
I mean, and I'm sure that someone's going to be knocking on her door. And I saw a really interesting, funny pun the other day. She says she's going to be talking to a judge pretty soon about what happened. You got to do your research. Think of Bitcoin as no different than your equities, your bond. Why do you hold a bond? Because it gets you a rate. that you get paid in what? Dollars. Dollars are the reserve currency. You sell your stock, you move to dollars, right? That's supposed to be the security or the safety net, right?
Mhm.
Start thinking of Bitcoin that way. There's certain coins, if you do your homework, I think that they're okay to own. XRP, we've mentioned in the past. Ethereum, definitely. I also like Litecoin. But some of these other coins, they're going to do well. Ultimately, though, the money all shifts back. The profits tend to all float back to Bitcoin. And that's the singularity. So I never recommend meme coins. I never say go buy, Pepe and a lot of these others. People have made a lot of money on them, but guess what? Those are the early adopters. They're already positioned and they're shilling this coin saying, hey, you should buy this. We're going to go up 1,000%. Maybe it goes up 300%, but can you get out before the other people do? It's just too much risk. And if you want to gamble, go to Vegas, put it on Black 28 or buy one of these coins, but you got to do it. I mean, know you're gambling. That's it. Never take to the table what you can't afford to lose. If you want to invest, stick with Bitcoin. Again, I like Ethereum too for a lot of reasons. It's just the use case and it's a proven use case. It's been around a long time. But understand what you're buying. That's the other thing.
Yeah, I think that's great advice across the board. That's one of the things that we try to do in our world is educate. Kimberly and I both were school teachers before we got into the money business, and we've taken an educational approach to that part of the world that we're in from day one. So we like for clients and prospects to be able to understand their options, and then they choose from basically a menu of services. And I think that education is where it's at. So you're here this morning learning about Bitcoin. I'm excited for you. I'm excited for me. I love listening to these guys talk every time I get a chance to. Sometimes I'm just kicking myself when I leave the conversation. But Jason, thank you very much.
I was just going to say, any burning questions? I know we're a couple of minutes over, but if anybody has any burning questions while we have the expert here, then speak now or forever hold your peace.
Speak
Hey, Zarel.
now, forever.
Yeah, it's your turn. Go.
So I was celebrating. One of my clients who works in the space, Jason, said, you know what, Sorrel, I know you're a late adopter. I'm one of those guys who just bought my smartphone. He says, I'm going to pay you in Bitcoin. And he did. And until this episode, I didn't look at it. And I just looked at it and it's like, oh my God, this thing went up 109%, right?
Mm-hmm. You got paid double.
Question is, it was on Venmo. Here's my question. Can I simply just keep buying some of that fractional stuff on Venmo and let it ride until eternity? That would be a good vehicle.
Absolutely, you certainly can. And again, I'm a big proponent of if you're looking long term, then take it off Venmo and put it in your own safety deposit box, and not a real safety deposit box, but you can pull it off. You can get a hardware device like a Trezor and you can pull it off and store it there, which you can put in your personal safe. It's no different than putting it on a computer or even storing it still with the exchange, except it's cold storage offline, unless someone can get into your house and get physical access to it. Then they can't get their hands on it. So,
and that's because the security of something like if your Venmo gets hacked, your Bitcoin is gone.
That's right. That's right. Well, and more likely you're going to be social engineering and be hacked yourself than you're going to see Venmo or something like that. There are those hacks. You do see those things. You're seeing all this fraud with Zelle these days. Typically, and the people are saying the banks don't want to refund it. Well, it probably wasn't necessarily Wells Fargo's fault that money got sent from your account. Maybe I doubt the security of the bank got hacked. Someone got your password. Someone talked to you on the phone. Someone looked on your social media, figured out your pet's, name, etc. And that's probably what happened to the money. But I love, Sorrel, that you brought up the whole you got paid in Bitcoin. Sorry about my dog.
I was just had a dog fight, so we're good.
I actually paid a contractor buddy of mine. I've been pushing him forever and ever to please just get a position. He was on the fence. And I finally convinced him. I said, listen, it was about a $10,000 job, but I said, let me pay you in Bitcoin so you finally have a position. So he agreed to do that. And what people don't, just like ACH, I could have transferred him ACH. That could have gone, but see, Zelle capped me at 5,000. Something else capped me. Venmo said no, and so on. So I would have had to write him a check or do whatever. Instead, what I did was just buy Bitcoin on Robinhood, send it to his Robinhood account, and paid him that way. And now he's sitting in Bitcoin. So I called him, and that was earlier this year. And I checked in with him a little later this year once Bitcoin hit 90. And I said, hey, how's your Bitcoin doing now? And he said, well, my wife kind of fussed and we needed something. So I sold a little bit. I'm like, really? And he goes, don't worry, I bought it back. I bought it back. I'm good. So he was still up on his invest, even though the 10,000, I think, dropped down to 8,000 at one point. Now it's
Yep.
much, much higher than it was. And
all right.
great
Well,
story.
guys, it's one of those things that we get in this situation where we could continue to talk, but we're a 30-minute episode, and Sorrel, I appreciate that add on there. That's a great real life example of how something like that happens. So anybody else want to chime in real quickly before we sign off? All right, guys. Well, as we go out into the world today, thinking about Bitcoin, we're reminded to love, laugh out loud, stress less, take care of your body, eat mostly plant-based, know what you're doing to yourself, give of your knowledge. Thank you, Jason, very much. Give of your time if you have it, money if you can to something you find valuable. Get your sleep, get your exercise, move your body, and then finally take that pause between stimulus and response. Don't overreact or react too quickly. So we say check yourself before you wreck yourself. Guys, thank you very much for your time. I hope it was valuable for you as much as it was for me. Jason, thanks again. We'll talk soon.
Thank you.
And we'll see you guys same time, same place tomorrow on the Daily Huddle.
Bye, guys.